Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 4th of February. So we start off the trading week with, no progression between the EU and the UK with Brexit negotiations. We've still got no conclusion between the US and China with their trade discussions and their trade tariffs. And that's already set to make an already difficult market conditions rather challenging. So let's go and take a look at a few markets here that we're going to be keeping an eye on in the trading room this week. Now, a lot of the currency markets have got very changeable trends. In fact, a lot of them on the higher time frames are not really any kind of structured trend at all. One here that is rather clean, though, certainly from the daily time frame and lower, is Kiwi dollar against the yen. Now, the yen has been quite a weak market for some time here, and that's why we're sort of seeing the yen and the sort of Kiwi dollar being able to progress against the yen here on this market. Well, going back for probably sort of back towards the beginning of the year. So if we take a look at this, we could see that the market is actually pushing out of another structure level. If we take a look at this on the higher time frame, on the weekly chart, the market not really in any kind of trend here, but it is breaking through and it's pushed through this sort of 75 sort of 50 area where there's been previous support going back quite a few years on this market. So we're looking for the fact that it's breaking through this area, looking for sort of a bit of freedom for a bit of a move further to the long side. If we come down to the daily time frame, you can see here on the daily we've started to get a nice trend momentum building up here. Haven't quite got all the moving averages in the right order, but we've certainly got some strong momentum in our indicators, and the market's back again breaking through this 75-50 area that we can see, and again it's quite a distinctive level, even coming down to the daily time frame too. So if we come down to the 4-hour time frame, we can see this in a bit more detail. The market's now sort of broken through this 75-50 area. Trend is looking sort of quite neat with some good geometry here with the moving averages, and we've got confirmed strength in the trend with our momentum indicators too. So the fact that the market has broken through the 75-50 doesn't look to be an awful lot in the way up to the next sort of structure level, which is around sort of just above that 76 level, so around sort of 76.30. So we're looking for opportunities on this market to gain entries into value areas once the market sort of presents them on some of these lower time frames. Still be looking for Kiwi dollar against the yen to continue higher. Now, if we come and take a look at the index market now that we track, which is the Dow Jones. So this is the Dow Jones future. Last week, if we recall, if we open up the daily, last week we were looking at opportunities here for the market to break long of the 24 sort of 70 area and looking for a move up to 25,000. Now that's happened this week, or happened last week I should say, and the market's now sitting at 25,000. So what now? What now for the US indices? At the moment, the market's sort of poised at and paused at that area there for a couple of days, as we can see. But strength is still looking strong across all of the US indices at this moment in time. And above 25,000, well, the next sort of structure point is in here around 25,500. So that's another 500 pips above price. So if we come down to the 4-hour time frame, we can see the sort of structure here a little bit more clearer. We can see that the market sort of paused here for some time. There is a bit of divergence coming into the indicators as the market sort of paused here, and that's sort of expected. So I think a lot of this is going to be driven by news flow and earnings, and we've had sort of relatively positive earnings from generally positive earnings from the US, and that sort of helped this market push higher. So again, if the market continues to break above 25,000, then I'm looking for opportunities between 25,000 up towards that 25,500 area. If this, if we get disappointing news, then this market could roll over, and then we're looking for sort of like near-term near-term support, a retest down here towards this sort of 24 sort of 65 area, and sort of 24 sort of 500 area. That would be the sort of near-term support and near-term targets to the short side. But overall, I'm still looking at the US indices to be bullish going forward. If we come and have a look at gold now, last week what we were looking at here was gold long above the 1,300 level. That's now sort of played out quite nicely. We can see that the market's rallied all the way up to 1.330, and now we're starting to get a well-deserved sort of retracement here. So if we come and have a look at this on the daily, the question is, well, you know, the market moved on. It moved on to where we expected. There was up here, though, it moved up quite quickly, and it was quite overstretched. So we always expect some point here between the low and the high. We've got to find a higher low at some point in time, and where is that likely to be? So we could start to do a bit of a fib study in here, and we can see that of the recent move, the 1.300 level clusters exactly with the moving averages, and it also clusters exactly with a 61.8% fib retracement. There's significant resistance here that the market tested before. So if the market sort of pulls back into this area, this could be a very nice area for certainly going to be support here. And if the market finds support here, could be an opportunity there to start to look for opportunities for the long side again here on gold. So in the near term, we're going to be looking for gold to roll over down towards that sort of 1300 decision point area. So there's a few markets there that we're keeping a close eye on in the trading room. Certainly hope it helps, and I look forward to speaking to you next time. Bye for now.